Good morning, everyone, and welcome to our November GIC meeting. I am Valerie Sullivan. I am chair, and I am joined by our board along with our staff. So hello to everyone, and hope that you are in for a great meeting today. I am joined by other commissioners. I have Bobby Kaplan, who is our vice chair. I'm also joined by Dana Sullivan, who is for ANF, the designee. We also have Rebecca Butler, designee for Division of Insurance. We have Anna Sinenko, Catherine West, Jane Edmonds, Kristen Pepin, Eileen McEnany, Jason Silver, Toby Schote, Tamara Davis, Martin Curley, Dean Robinson. And I may have missed people who joined late, but I will announce them as they join. We are also joined by a new commissioner, Darren Ambler, and I want to welcome you, Darren, to the commission. I'm so excited that you have 25 years of employee benefit expertise along with human resources expertise, and you are a welcome addition to our board. So Darren, say hello and know you are welcomed here today.
Great, thank you. I'm excited to see what kind of contributions I can make here and how I can help the GIC.
That's excellent. Yes, we are thrilled to have you. I also want to say hello and a shout out to Jennifer Hewitt, our new CFO, who's joining us today, maybe on camera. I'm excited to have you join and welcome Jennifer. At this point, I'm going to turn the meeting over to Matt, our executive director, who's going to walk us through the agenda today.
Great. Thank you, Madam Chair. Go to the agenda slide. Perfect today. So we will begin with a compliance item that we bring to you annually as we hear from Marie Pollock at CTI, who is our audit vendor, on two audits that we have conducted on our health plans. The first will focus on mental health parity for all four of our plans. This audit is done to make sure that we're compliant with guidance that was issued by the federal government last year. And commissioners will note that this is the second year that we've done these mental health parity audits of our plans. The second piece of the audit presentation will be focused on two of our four plans, Health New England and WellPoint. This, as you will all recall, looks more generally at the performance of these plans, essentially as third-party administrators, including the accuracy and turnaround times and other metrics that we look at mostly around claims payment. Then we'll turn to an important discussion about the Commonwealth's budget picture and what it potentially means for the Group Insurance Commission as we begin preparations for next fiscal year for coverage starting on July 1st of 2026. So we always have a long runway as we prepare for the coming fiscal year. And this year is a little different because we're doing a lot of front-loaded work that we want to bring you in on. So we'll start that section of the meeting with a guest speaker, our colleague Chris Marino, who is Assistant Secretary for Budget at the Office of Administration and Finance. Chris will give an overview of the Commonwealth's budget picture so that we can then understand with a little more clarity how the GIC fits into this broader budget context. Then we'll have a discussion after that presentation where we'll be gaining commissioner feedback on the various potential options that we have for the GIC to accommodate what is looking to be a very challenging budget year ahead. So that's what we have in store for you today. Valerie, as Madam Chair, turn it back to you for minutes.
Yes, thank you, Matt. Thank you. Yes, well, welcome Chris Marino. We are excited to hear what you have to say. So thanks for being here. And I also want to let everyone know that Jerzino Garand has joined. So good morning, Jerzino. Thanks for joining. At this point, I will entertain a motion to approve our minutes from our October meeting.
So
Motion to
moved.
approve. So I'll
Thank you,
second.
Bobby. Thank you, Toby. So at this point, I'm going to ask Andrew to do roll call. And for me, Andrew, I'm an I.
Thank you, Chair. Vice Chair Kaplan,
Aye.
thank you. Designee Sullivan,
Aye.
Designee Butler,
Aye.
Commissioner Choate,
Yes.
Commissioner Curley,
Aye.
Commissioner Davis,
Aye.
Commissioner Edmonds,
Aye.
Commissioner Guerin,
Aye.
Commissioner McEnany. I know she's in the car. We'll come back. Commissioner Peppin,
She might also be in the car.
yeah, Commissioner Robinson,
Aye.
thank you. Commissioner Silva,
Yes.
Commissioner Sinenko,
Aye.
Commissioner West,
Yes.
new Commissioner Ambler.
I'm not sure I can vote on that. I wasn't in the meeting.
You can, but you can abstain too. It's up to you.
Yeah, I'll abstain.
Thank you. Let me go back. Commissioner McEnany,
Yes, or aye.
thank you. Commissioner Peppin, she must be unavailable. The motion passes nonetheless.
Aye. Sorry, I'm having
Yeah,
technical
it's quite all right.
difficulties.
Motion passes unanimously, those voting with one abstention.
Okay, great. Thanks. We'll get into the meat of the meeting now. So Matt, I'm going to turn it over to you.
Yep. Thank you, Madam Chair. As always, we've provided with a comprehensive written executive director's report. I do want to acknowledge with apologies that we are late in getting materials to you. It was really unavoidable with the flurry of recent work around the budget that we're bringing you into today. In any event, I do just want to highlight a few items in the report. We do have a lot of other substantive items to discuss, so I'll do this as briefly as I can so that we can move on to the other topics. So on the legislative front, as you're all aware, there's been some recent developments out of Washington, D.C. with the White House announcement of agreement on some pricing for GLP-1 drugs to treat obesity. Those deals with Novo Nordisk and Eli Lilly lower the prices pretty substantially for Medicare and Medicaid and lower direct-to-consumer prices. While this is welcome news, it's not yet clear to us how it will impact employers, plan sponsors like the GIC. On the Medicare side, it does give me some reasons for optimism. Medicare does not currently cover GLP-1s for obesity, so adding coverage could bring some relief for the expense for our Medicare members. For our active plans, there is no direct impact. None of the announcement details impact employer-sponsored coverage, but my hope is that it could, over time, more broadly bring downward pressure on GLP-1 prices. So hopeful, some reason for optimism. On the also in this space, I'd want to turn it over briefly to Morgan Simcoe, our government affairs manager, who can give a brief update on some activity on the municipal side, specifically with some member units that are part of the Hampshire County Group Insurance Trust that we updated you on in our prior meetings. Morgan?
Thanks, Matt. Good morning, everyone. Let me put my video on. Good to see you all. So I do have a municipal update that I wanted to share. We have gotten a lot of interest, and so we just wanted to make sure you were all up to date with that. We've been hearing from dozens of municipal entities expressing interest specifically for July 1, 2026. Most of them are currently part of the Hampshire County Group Insurance Trust, which you may know serves Central and Western Mass. And we began outreach to these HCGIT municipal entities in August, but many of them, especially the smaller ones, are struggling to meet our statutory deadlines that require them to join and produce necessary votes and agreements by December 1. So we want to be supporting these communities, but also uphold our statutory deadlines. And so in that spirit, last week we announced a one-time extension for the HCGIT municipal entities that are actively working to complete these requirements. So while these municipal entities in this position still have to submit the letter of intent by December 1, which is the statutory deadline, they will have until January 5th, 2026 to complete and provide documentation of all necessary local votes and agreements. They also have to attend any onboarding activities that we've scheduled between December 1 and January 5th to maintain eligibility for that January 5th extension. I also want to know the letter of intent is binding for both the entity and the GIC, and it's contingent on the municipal entity completing all necessary local votes, agreements, and providing documentation no later than that January 5th date. So to date, we have not received any letters of intent from this group, but we have been in touch with, in addition to including the dozens that have been reaching out, 5 specifically have expressed interest in their intent to join and taking actions towards that December 1 deadline. So those are the HCGIT communities. Looking outside of that, we have received a letter of intent from the Charles Water Pollution Control District, and we've received a PEC agreement from the city of Malden, and both of those intend to join the GIC effective July 1. So that is where we are. As you know, we've been saying this is a significant uptick in municipal activity. Over the last 5 years, the GIC has onboarded only 3 municipal entities, and each of those were the sole municipality that we onboarded in a plan year. So this is a huge increase in what we are used to. So with that in mind, we set up a process to manage this large influx to ensure smooth onboarding for all entities that seek to join us July 1. And that includes grouped meetings and trainings across multiple municipalities for efficiency. So we will update you at our December meeting with final numbers once the December 1 deadline has passed. But that is where we are today.
Thank you, Morgan. Just want to thank Morgan for all her work on this. We're expecting a very busy municipal year. So I appreciate all the work that she's doing. Lastly, for updates on the fiscal side, so as our chair noted at the beginning, our new CFO, Jennifer Hewitt, has joined us, and for the last 2 months now has been getting up to speed on all things GIC, including the closeout for FY25, managing and tracking FY26, and now initial work for FY27. So she's been taking the time to understand our current systems in terms of budget tracking, and has loads of new ideas on how we can revamp that so that she can better inform the executive team and we can better inform you, the commission, about our spending trends. She's going to need a little bit more time. So while we're not providing a CFO report today, we will be back in December. But I did want to ask Jennifer to say a few words about some current items that we are tracking on this front. Jennifer?
Thank you, Matt. Good morning, everyone. It's nice to be here. It's nice to meet you all. I'm just about 2 months into my role here at the GIC, and definitely have been enjoying the work and my colleagues. We're continuing to actively work on tracking FY 2026. And at this point, we have a couple of things that we're aware of. We know that we're projecting to have a shortfall. To be able to fine tune that, we are going to need a little bit more time. One of the pieces that is affecting that is, as Morgan was saying, we've had some new more municipal enrollments. And that is adding to our overall enrollment picture. But in higher numbers than that, it's about 1.5% of our enrollment we seem to be about 1.5% higher enrollment than what we had projected in our original budget. So we're doing some more work to understand why that is and where that's coming from. And we'll have better results to be able to report back in December. But that is definitely having some impact on our projections for the current fiscal year. We're also, as last year, the pharmaceutical spend is certainly having an impact on our overall budget. And so we need to have at least one more month of actuals under our belt to really be able to give you a better projection and see where we think we're going to go for the year. So those are two of the areas that we're reviewing, and look forward to having more and better level of detail for you in December. Thank you.
Yeah, thanks, Jennifer, and welcome. I don't see any questions, so we can keep moving.
All right, great. So just before we move on, just one last item here, just a follow-up. In our last meeting, our vice chair asked us about the savings that we would incur from winding down our contract on DocuSign. We continue that work, and for FY26, we will need to enter into will not need to enter into a renewal of that contract, and that will save us a little over $370,000. So that amount, as well as the associated costs of maintaining the system, will be gone. So just wanted to make sure we followed up on that.
That's great follow-up. We love it.
Thank you. Thanks.
You bet. All right. If there are no questions, happy to move on. Hand it back to you, Valerie, for the next agenda item.
Yeah, so let's keep moving. So we've got, it looks like we've got some audits here. So Rochelle, why don't you introduce this section, and we'll look forward to some very fascinating information on how our plans are performing.
Yeah, before that, I just want to thank Rochelle for her work on this. She's brought a great deal of expertise on this topic that is serving us very well. So thank you, Rochelle, and take it away.
Yeah, thanks.
Thank you. Good morning, commissioners. I'm here to provide a quick introduction for both audits, and specifically to provide just a little bit of background information on the mental health parity side. The Mental Health Parity and Addiction Equity Act, or MAPIA, as you might have heard it referred to as, was enacted in 2008. Originally, when it was enacted, it was to ensure that if plans provided mental health care coverage, they did so without imposing more restrictions to mental health care than on the medical surgical coverage side. Subsequent amendments to broaden the parity requirements occurred, and it gave the federal government more ability to enforce the law. Changes in 2013 required plans to complete mental health parity comparative analyses of both the provision of medical surgical care to mental health and substance use disorder coverage, both for quantitative treatment limitations. You'll see these abbreviated as QTLs. And these are things like the limit on the number of visits per year, or co-payments or deductibles. And also non-quantitative treatment limitations, or NQTLs, such as prior authorizations or concurrent review. In 2024, regulations were issued by the U.S. Departments of Health and Human Services and the Treasury, and some were set to go into effect this year. The final regulations provided increased breadth and depth of the NQTL and QTL analyses, among other things. Subsequently, a lawsuit seeking to overturn the regulations was filed. The enforcing agencies responded by asking for an abeyance of the lawsuit so that they could review the final regulations and potentially revise them. They have also issued a statement that they would not enforce the final regulations until after the lawsuit is settled. In addition, while there is some federal guidance on mental health parity analysis compliance, existing guidance can be vague and subject to different interpretations. All that said, 2 years ago, in anticipation of the 2024 regulatory changes, the GIC stepped up its oversight of plans on mental health parity and hired CTI and CXC to audit our plans. As Matt said, this is the second year of audits. We're looking at the fiscal year 2024 plan information and claims. Plan benefits have changed between fiscal year 24 and currently. So bear in mind that if we audited the current year, the results would be different. Also keep in mind that the findings presented are preliminary. The GIC continues to work with CXC and continues to review areas identified by the auditor. GIC, along with CXC, has met with several of the plans, and we continue to meet with the other ones. Through these meetings and discussions, we found that sometimes what looks like noncompliance is really just a needed change in the plan materials to accurately reflect the plan practices. But be assured that any findings in the final report will be examined against current benefits to see if additional changes need to be made in order to comply with mental health parity laws and regulations. The second half of the presentation will be on the annual claims audit. Our plans are audited on an every other year cycle, and this year we looked at Health New England and WellPoint. Claims audits look at claim payment accuracy and operational considerations such as claim adjudication time or whether members were eligible for the services they received. Claims audits are much more black and white compared to the mental health parity audits, but both are very important. And I'd just like to say that GIC is really grateful to CXC and CTI for their excellent work. They've been a very wonderful partner. So I'd now like to hand the floor to Marie Pollock from CTI, who will walk you through the results of both. Thank you.
Thank you, Rochelle. Good morning, ladies and gentlemen. As Rochelle indicated, my name is Marie Pollock, and I am the Director of Medical Audits here at CTI. I'm going to present both the mental health parity preliminary results and the final medical claim audit results. We will have time for questions at the end, but wanted to let you know that the MPIA analysis is still ongoing, as Rochelle indicated, and we'll probably have to review your questions, get with the team, and get back with you on an individual basis. With that said, we can begin the slide presentation. You can go ahead and move to the next slide presentation. The analysis was conducted on fiscal year 2024, or the 7/1/23 to 6/30/24 plan year. The analysis was performed on all 4 health plans: Health New England, Mass General Brigham, Harvard Pilgrim, and WellPoint. The scope of the review included comparative analysis in the NQTLs, or the non-quantitative treatment limitations, as compared to the medical surgical benefits. It also included a review of the quantitative treatment limitations, an analysis of the benefits subject to those financial requirements and any quantitative treatment limitations. Wanted to go over what is a finding. A finding can be where we have identified an area that we recommend the GIC continue reviewing the benefits as presented and could potentially be problematic or need more investigation or more information. Next slide, please. The audit process. CXC and CTI and the GIC met to determine the audit scope. We then met with each of the health plans and requested their information and their data. The data was analyzed and used to review for potential compliance issues. And then the plans were given an opportunity to respond to all of the draft reports. CXC did provide those findings, draft reports, and plan responses to the GIC. And as Rochelle indicated, we are currently still in progress in reviewing those results with each of the plans and concluding on all findings, and final reports will be updated and presented to the GIC upon completion. Next slide, please. The preliminary findings for Health New England And I wanted to indicate that in all health plans, we had the same finding for the co-payments for the mental health substance use disorder and the outpatient other Tier 1 benefit classification that we are recommending the GIC evaluate the plan design and make any changes if necessary. The minute visit limitation for the following services were identified as needing further review too. Nutritional counseling, physical therapy and occupational therapy, and smoking cessation. And please note that any of the minute visit limitations that include an asterisk, these QTL issues were identified in the last audit, and the current plans have removed these issues. For the non-quantitative treatment limitation, the 4 areas of potential non-compliance were identified: concurrent review, network reimbursement, network adequacy, and coverage scope. We did identify areas of improvement for the carrier's documentation as they relate to the factors and evidentiary standards used in the design and application of the NQTLs related to network adequacy and geographic restrictions imposed on the plan. Next slide, please. The preliminary findings for Harvard Pilgrim again included those co-payments in the outpatient Tier 1 through 3 benefit classifications, the visit limitations for the following services of nutritional counseling and physical therapy and occupational therapy. In the NQTL analysis, it's kind of early here in the Midwest. The NQTL analysis included 3 areas of potential non-compliance that were identified for the GIC to further examine in the areas of network reimbursement, network adequacy, and exclusions. Next slide, please. The preliminary findings for the MGB health plan also included those co-payments for the mental health substance use disorder claims in the outpatient Tier 1 benefit classification, the minute visit limitations for the following services of physical therapy and occupational therapy, and smoking cessation. Our NQTL analysis identified 3 areas of potential non-compliance that should be further examined by the GIC in the areas of prior authorization, retrospective review, and network reimbursement. Some areas of improvement for possible carrier documentation in their written documents included the factors and evidentiary standards used in the design and application of the NQTLs related to experimental and investigational determinations. Next slide, please. The preliminary results for WellPoint Unicare findings, again, included the co-payments for mental health substance use disorder in the outpatient Tier 1 through 3 benefit classification, the minute visit limitations for the following services of physical therapy and occupational therapy, and smoking cessation. Our NQTL results included 2 areas of potential non-compliance and were identified for the GIC to examine further in the treatment plan and exclusion area. In addition, we also identified areas of improvement in their carrier documentation and operational reporting. We recommended written documents be reviewed for the factors of evidentiary standards used in those design and application of the NQTLs related to concurrent review, treatment plans, provider credentialing, and network adequacy. We are requesting additional data regarding the operation of the plan related to provider credentialing and network adequacy from WellPoint, and they are currently working on that. Next slide, please. The summary and next steps. As Rochelle indicated, the audit process is ongoing. The findings are not yet final. We continue to conduct vendor meetings and discussions. Some have taken place and some are forthcoming. The GIC and CXC and CTI continue to work together with the plans to investigate these findings and assess compliance and continued review by the GIC. Next slide, please. I'm now going to move on to the claim audit results for Health New England and WellPoint for the fiscal year of 2024. Next slide, please. The audit objectives were that CTI medical audits were conducted to determine whether GIC contract terms were followed, claims were paid in accordance to plan documents, members were eligible and covered by the GIC plan at the time of service, and any claim administration, eligibility maintenance systems, or processes that needed improvement. Next slide, please. The components of the audit for each of the health plans included a random sample audit of 200 claims, an electronic screening of 100% of the population of claims, followed by a targeted review of 150 claims, an operational review including extensive questionnaire and administrative management interviews, and a plan documentation analysis. Next slide, please. For the fiscal year 2024, we have the following demographics. Total paid amount for Health New England was approximately $131 million. The number of claims processed was 534,000, and the median claim turnaround time was 13 days. For WellPoint, the total paid amount was approximately $1.1 billion. Number of claims processed was approximately 5 million, and the median claim turnaround time was 2 days. Next slide, please. Here we have provided the performance summary for each of the health plans. Here at CTI, we benchmark the health plan's performance based on our last 100 audits performed here at CTI. And we benchmark the following: financial accuracy, accurate payment frequency, and accurate processing frequency, which includes non-financial errors. For Health New England, as you can see, they performed at 100% in their random sample audit in all categories. For WellPoint, they ended up in the quartile 2, which was slightly below our median rate at 98.42 for financial accuracy. And for accurate payment frequency, they were at 95%, which was in the quartile 1. And for accurate processing frequency, they were also in quartile 1 at 94.5% accuracy. Next slide, please. For Health New England, again, we conducted a random audit of 200 claims. We did not identify any errors, either financial or procedural, in those 200 claims selected for random sample. In our 150 claim targeted sample, we did identify areas that were deemed to be in error, such as duplicate claims, claims paid without investigation for potential third-party recovery, payment to provider fees that were greater than charged, paid claims where CMS would not have paid, and incorrect NCCI coding edits, and respiratory pathogen panel testing. Additionally, we have identified errors in the applied incorrect copayments category. In our operational review, we did identify that 65% of the appeals that H&E received on behalf of members were overturned upon further review. Next slide, please. The WellPoint key findings. In our random sample audit of 200 claims, the financial accuracy rate was at 98.42, or a 1.58% error rate. Errors on 11 of the claims, including one non-financial error, and the impact of those errors was a $279 underpayment and $13,573 in overpayments. 4 of the 10 financial errors were auto-adjudicated, meaning no human intervention, and 6 were adjudicated manually. In the 100% electronic screening with 150 targeted samples, we identified errors in the following categories: payment for plan exclusions such as non-surgical weight loss treatment, cosmetic abdominoplasty and liposuction, investigational treatment, and paid dental claims incorrectly under the medical plan. In addition, we identified a large payment made directly to the member versus the provider, payment of duplicate claims, payment for claims that exceeded the out-of-pocket expense limitations, and incorrectly denial of preventive services. Next slide, please. Recommendations for both H&E and WellPoint. We suggest that carriers conduct a focused analysis of the findings identified during our 100% review. And I wanted to indicate that CTI has already provided the claim detail to be used in this analysis to each of the carriers, and they are currently undergoing that analysis. We also suggest the carriers seek approval for settling any subrogation cases where the recovery is less than a defined amount. For example, where the settlement could be 50% less, or less than 50% for any subrogation case on a lien of more than $100,000. In addition, we recommend the GIC consider negotiating contract language requiring Health New England and WellPoint to compensate the GIC or its members for errors that were identified at no fault of the GIC or its members. Next slide, please. A specific recommendation for Health New England is to review their appeals process to determine why 65% of the appeals were overturned and examine the root cause to develop an action plan for improvement of the plan moving forward. Next slide, please. For WellPoint, we have several specific recommendations. We recommend, and we have already met with WellPoint to discuss the sample findings, focus on improving WellPoint's financial accuracy rate, their accurate payment frequency, and their accurate processing rate. For those systemic errors, WellPoint should and are currently running impact reports to identify and adjust affected claims as directed by the GIC. We encourage WellPoint to analyze its turnaround time of 2 days, and determine whether or not that is too quick and possibly negatively impacting the overall financial and claims processing accuracy. We recommend WellPoint review its fraud, waste, and abuse process, including the Office of Inspector General's list of excluded individuals and entities, to avoid making payments to any providers or sanctioned providers on that list. We did identify a total of 63 claims from 3 sanctioned providers submitted and paid during our audit period. Lastly, we recommend that WellPoint have an off-cycle audit performed in fiscal year 2025 and for the carrier to absorb the payment of that audit to ensure necessary changes have been made and any required system updates or process enhancements have been completed. Next slide, please. I want to thank the GIC, the Commission, for the cooperation that we've had with the health plans and working on an improvement in areas that we have highlighted in this presentation. Any questions? I know that was a lot to go through, but I'm opening the floor.
Yeah, thank you. Thank you very much. I don't see any questions.
I have a couple, Valerie. This is Toby.
Yeah, so go ahead, Toby.
Maybe it's my fading memory, but it seems to me that there's a lot more aberrations this year than there was in prior years. Is that me or is that your reflection too, Marie?
Well, last year we audited different carriers.
Right, but even given 2 years, the year before.
Oh, from the prior year, yes. We did identify more areas, especially in the WellPoint, to possibly make some improvements, yes.
Okay. And what is the target turnaround time you audit against? I'm just curious.
Well, we do like to see the median time to be under 10.
Okay.
But with the level of errors that were identified for WellPoint, it almost appears that they are processing claims too quickly and not taking into account accuracy.
Okay, and the last question is, in the payment of claims, does the audit include what the fees were? In other words, it can be paid correctly given the plan design, but it could also be what the fee schedules are that are being used?
You mean provider fees and
Yes.
contracts?
Yeah.
Yeah, yes, we do review each sampled claim against the pricing that's been provided by the plan in our audit review to make sure it's been applied correctly.
Okay, and that's the provider fees from the plan, right? It's whatever you're saying, it's they're
The negotiated
fees.
rates.
Okay.
Mm-hmm.
That's interesting. Okay, thank you.
Yeah. Thanks, Toby, for asking that. I had the same sense that what we're hearing in terms of outliers is higher than, previous times that we've reviewed this type of audit data. I am not sure. So I see Bobby has her hand up. So I'll hold my question until Bobby goes. She might be asking the same thing as I'm going to ask. Go ahead, Bobby.
Well, maybe, maybe not. But I was very curious whether when WellPoint was last audited, was their turnaround time, because I don't recall, was their turnaround time greater? Like, have they decreased their turnaround time, now in this particular audit? And
it was actually exactly the same.
Ah.
Yeah, it was the same. And it was pointed out in previous audits that it was pretty quick and potentially impacting accuracy. And that's why we have now recommended an off-cycle audit to make sure that they are taking into account all the recommendations that we have provided to them to improve performance.
Okay, thank you.
Mm-hmm.
Yeah, I would just, I'm sorry, Madam Chair, you had a question.
Oh, you're on mute.
I was only saying, go ahead, Matt. You can
Yeah,
certainly.
I was just going to say, yeah, thank you. There does seem to be some stickiness with the issues that we have prior identified with WellPoint on these metrics. As we always do with the prior audit of WellPoint, we did implement like a set of remediation activities to address those problems. It does not appear that those efforts have produced a different result here. So as Marie noted, we're contemplating some additional oversight here so that we can really try to get to the root of the problem here. I will note that as with all these metrics, we do have performance guarantees in place. So when they perform below our expectations and our benchmarks in their contract, they forfeit a portion of their administrative fees. So there are implications for the performance here, but we also want to make sure that we're putting in place measures that the next time they are audited, we see different results.
Yeah, thanks, Matt.
Thank you. One other thing, I just wanted to let the commissioners know that we in fact had them look back at the last two audits, and that's where so we really went deep on it to make sure that led up to this off-cycle audit request.
Yeah, no, I think that's good, Rochelle, to let us know that you looked back, because the genesis of my question was about trends. And so, it would be great to have like some sort of graph on the trends, what you saw. It sounds like you've looked at that, you're just not sharing that with us. And the trends are concerning, which is leading to the off-cycle audit, if I'm hearing you.
Yes, there was some slight improvement, but not enough to still have some concern about the trends of the errors. And so that's why we had the recommendation for the off-cycle audit.
Okay. And Marie or anyone from CTI, if you did some sort of like kind of run rate analysis, you did 200 claims, but if you looked at the size of our claims, right, like because we're far greater than 200, and you extrapolated the data, like what is the overpayment amount? If you, I know it's a theoretical exercise, but at the same time, if you look at the size of the 200, across all the plans, but certainly the ones that are uh, performing as a result of, fast processing and inaccuracy, like how big is the possible overpayment?
Well, for H&E, of course, we had 100%, so we could not extrapolate anything there. But for health or for WellPoint, we can provide that information. We do not normally provide that information because, as you said, it is a best guess scenario. But I can get back with you on that analysis. We have done it. I just don't have it here right in front of me, but I can provide that back with Rochelle and Andrew, and they can report back to the commission.
Yeah, I would love to see that, please. And I'm sure other commissioners, just because, it looks small, and it's, 1.5 or whatever percent, but in these fiscal times where we're challenged significantly, every penny matters. And I want to make sure our health plan partners know that. And sometimes it's unclear if the financial penalties we've put in place in the contracts are enough to incentivize them to ensure their operations are sublime on our behalf.
Yes, I agree.
Thank you.
I'll provide that to
Hey,
you.
Darren, I see you have your hand up.
Yeah, my question is more of a general one for Marie. Historically, a lot of insurance carriers and administrators outsource mental health benefit services at different levels, especially just renting networks. Do you see differences that are caused by outsourcing some of these services, or some of the current carriers that are in the GIC plan outsourcing a lot of the services outside their own walls?
It's not uncommon, but as far as rates, we haven't done an analysis on how they compare in reimbursement rates, but that is part of the whole mental health parity analysis.
It adds to the challenge.
But it does add to the challenge, but it's a limited comparison based on the guidance from the congressional rules. So it is a limited comparison.
Thanks, Marie.
Hey, Andrew.
Andrew?
Yeah.
Yeah, I just wanted to know two things. To Darren's comment just now, one of the things that we've noticed is when the carve out is handling the mental health, we sometimes have documentation problems within our handbooks because the med surg stuff is described differently than the behavioral health piece. It's not that there is a compliance problem, it's more a language problem, and that's one of the things we're looking at to smooth out. And with respect to the chair's question, I note that the auditing process is still ongoing. Is once those targeted claims have results, there's a whole data pull to go back to the carrier to then go look at that whole classification of claims so that we can get those kind of numbers that you're looking for, and we can get reimbursed or clear up the problem.
Yeah.
Thank you.
Yeah, no, thank you, Andrew. I certainly know the staff is on top of these issues with the carriers, so appreciate that dedication. So thanks.
So we're hearing a lot of feedback from commissioners today. That's extremely helpful to us, given some of the issues that have surfaced through this year's audits. I would anticipate that we'll have some follow-up to the commission, so that you can see we can respond to some of the questions that you've asked, and we can provide a little greater sense of what our measures are moving forward to change some of these trends.
No, thanks, Matt. I have one last question for Marie, if I can. What are you seeing in terms or hearing from provider groups, payers more on AI, using AI to accelerate payments, to make it easier, for them to even police themselves. Can you give us any thoughts on where you're seeing success or some things that are scary to you regarding AI?
Well, AI is a little scary all around. But we are seeing AI being utilized mainly in the payment integrity, which is the post-payment audit review of claims and analysis where they're taking 100% in review. And then AI is also being used in the membership customer service and appeals area where the AI can direct a person via chat, either chats or voice recording to better help a member with any questions. And then, AI is kind of a key word right now, but in all payers, they have an auto adjudication because they have programmed their systems to the benefits of, all the self-funded plans that they administer. So whether or not you consider it to be AI or just auto adjudication based on programming of their systems, that can kind of be commingled there. But, we also review for benefit plan structure and how they have programmed their systems during our review process. Does that kind of answer your?
Yes, you're spot on. So thank you.
Okay.
All right. Terrific. Well, riveting information audits can be, but also very important. And we appreciate all the work that the staff have done as well as CTI. So thank you very much, Marie, and your team and colleagues and staff.
Thank you.
We're looking forward to some follow-up because it was, as Matt said, some helpful feedback from commissioners, and we'll look forward to feedback and follow-up at our next-ish meetings. So thanks.
Right. Thank you so much for the opportunity to be here.
Yeah, thank you.
Dear Marie.
All right, let's move it. Let's move along. Go ahead, Matt. We've got a guest speaker.
Yes. Bear with me for just a moment. I want to welcome Chris Marino, again, Assistant Secretary for Budget at the Executive Office of Administration of Finance. He's tasked with building and balancing the governor's budget for the entire Commonwealth, no small task. And he's joining us today to give kind of a general overview of the state's budget picture so that we can better understand the pressures that are coming through that to the GIC and to others. So, Chris, assuming you're on, happy to turn the floor to you. Thanks for joining us.
Awesome. Thanks so much, Matt. And thanks, Chair Sullivan, commissioners, the whole GIC team for the opportunity to talk today about, excuse me, what we're seeing with the current fiscal picture. Again, Chris Marino from A&F. I guess taking a step back here, I'd say Massachusetts is in a pretty similar position to a lot of states across the country. We're all facing some pretty significant fiscal headwinds, and there's a number of kind of shared reasons for why we as state budget writers are confronting the same challenges. We're going to look at three places where kind of a convergence of pressures are coming together in creating budget gaps that we're trying to grapple with from year to year. I think the big one that I'm sure folks are all well aware of and tracking and kind of seeing the news every day are just federal actions, right? So while the federal shutdown is over, we also know we had OB3, the One Big Beautiful Bill, passed earlier this summer. And those things are putting intense pressure on states. I'd say as it's been publicized and we have a tracker online, I recommend that folks take a look at that to kind of see the status of where things are. We have about $1.3 billion in federal budget impacts in FY26. those are things that are both kind of touching the budget and tangential to the budget. So I think particularly for folks like yourselves who are really kind of wrapped into the healthcare space, as we think about particularly the pressures caused by changes to both Medicaid, our connector program, those are elements of the One Big Beautiful Bill and other policy actions that are going to put intense pressure on the state, whether it's directly on the budget or for those programs off budget. But on top of healthcare, we'll get food security. There's certainly a number of places where negative impacts are hitting the state because of federal actions. I'd say the one piece that we are really focused on right now, just as we think about balancing the fiscal year 26 and 27 budget, is the fact that OB3 is expected to cost the state about $664 million in lost tax revenue in fiscal year 26. And then there are out-year costs to that as well. And I think putting into context kind of why this is most challenging, right? We signed the budget, the FY26 budget on the 4th of July. OB3 was passed on the 4th of July as well. And so we had no opportunity in signing the fiscal year 26 budget to plan for tax impacts signed into law by the feds that, because of conformity by and large, automatically impact state tax revenue estimates. And so that's the first piece, federal actions. And that's pretty widespread. I think that's something that kind of by the day we're learning more and more. We're continuing to track and monitor and try to plan around how those impacts are going to hit the state. The second piece, which is, I think we're all, again, kind of as both state budget writers, but then also for all of our folks at the agencies here, we're talking to GIC staff all the time, just spending pressure, right? And we're dealing with those across the board. So on top of the federal challenges that we're experiencing and the cost pressures those are creating, we're also just seeing the cost of running government go up exponentially from prior year expectations. I'd say most notably, and again, I think I'm kind of talking to a crowd that probably knows all this stuff much better than I do, healthcare expenditures, right? We're seeing by and large across all agencies with a healthcare expenditure component 3 times the rate of revenue growth in our estimated expenditures. This is kind of most notably coming through in our mass health system and the costs that we're seeing there. But we're also seeing that with state employee healthcare costs as well. So I think in the work that you're all doing as you're kind of reviewing kind of what the cost is looking like across members, that is going up significantly well ahead of our revenue estimates. And I think to put that into context, we typically would expect somewhere between 2 and 4% revenue growth on a given year. And again, we are seeing healthcare cost growth, double digits growth. I think to put this into context kind of for what we're seeing in the healthcare space with just kind of the known numbers, right? For fiscal year 25, we filed supplemental funding of $240 million for GIC state employee healthcare costs, right? The law that was driven by increased utilization, particularly for higher cost pharmaceuticals like GLP-1s. And so again, that's something where we have a number here where kind of mid-year we had to make some adjustments because of the trends that we were seeing. And again, we were working really closely with Matt and folks on their team to identify what those pressures were looking like. And again, really appreciative of the collaboration there to understand and track that problem over the course of the year. I'd say on the mass health side, I think kind of, again, mass health, the largest spending program across the whole budget, right? We filed for $2 billion in growth spending needs in our closeout supplemental budget. And so I think you look at those two things together, right, on top of a number of other pressures that are kind of spread out throughout the budget. And you can understand kind of why, the budget we signed in July looks very different than the amount of spending that we need for these types of pressures over the course of the fiscal year. I'd say on top of the fact that, healthcare, a really top priority of the administration, and I think, kind of collectively all of us, we have other priorities too that are growing at similarly large rates above the rate of tax revenue growth. And so things such as implementing the Student Opportunity Act, we have fiscal year 27 is the last year of implementation of that schedule. So K through 12 education costs, creating a more affordable and more accessible higher education and early education opportunities. Those are places where we're continuing to see costs grow as we try to create access and focus on our affordability agenda. Things like behavioral health services, which again touch on your world as well, but there's kind of a whole continuum there of services being offered across state government to help support access for behavioral health services, just to name a few, right? But all of those things are dealing with similar cost growth above that rate of revenue that we talked about. And I think to that point, turning over to kind of the last leg of the stool here in terms of the kind of pressures that we're dealing with, tax revenue. we convened administration and finance with our colleagues in the legislature, an economic roundtable at the end of September. And this was an opportunity, I mentioned before, I think all the uncertainty with the federal government, whether their actual policies being implemented, discussed. I know we've kind of heard on the daily these changing tariff policies. Those have major influences on our tax revenue collections. And so not even outside of the fact that we had actual tax cuts that impacted Massachusetts from federal legislation, even just other policies around tariffs, around immigration policies, things like that have profound impacts on the state. And I think a lot of the policies that are being discussed right now federally or have been put into effect federally do have an exacerbated effect on a state like Massachusetts. And so we brought in some economists to help us better understand their view of the state of the economy and what it might mean for us for tax revenues. And I'll say, while no economist was forecasting a recession, folks might remember that earlier in the spring and kind of in early summer, there was definitely a heightened risk of recession in a lot of the analytics that we were seeing. I think Moody's was out there and some other folks talking about 60-70% risk of recession within the next year. That has since tapered down. And I think kind of we feel like we're in more of the normal kind of range of recession risk. So no one was in the fall was forecasting a recession, but they were definitely focused on a continued slow economy, which is something that we've been seeing in Massachusetts for a number of months now. This is really, think about things like, wage stagnation, think about things like, what the job market looks like right now and that kind of tightening for a bit. And I didn't say our labor market here in Massachusetts has been pretty tight for a while now. Those factors, I mentioned before, immigration policy, that's a pretty big element of our workforce. And to the extent that we're having immigration policies from the federal level impact available workers, I think that does really have an impact on Massachusetts and the growth in our economy. So factors like that were really consistently discussed by our economists, and I think point to the forefront of why we might be seeing this kind of, we're not talking about a massive revenue drop here, but we are talking about kind of being kind of pretty close to our benchmark and chugging along. And we've actually seen that in the numbers. So to put this all into context, for fiscal year 25, when you back out the income surtax, which is dedicated to education and transportation, and capital gains, which is which anything kind of over a certain threshold is dedicated to our stabilization fund, we finished the year $50 million, 0.1% over benchmark. So kudos to DOR. They did a really nice job there. They're around the mark. But for us, what it means is, I mentioned before, we had to file supplemental funding, $2 billion for Mass Health, $250 million for state employee healthcare costs. Our revenue number was right on benchmark. So for those unplanned costs over the course of the fiscal year, we are not seeing revenue grow in a way that we can afford those things. I'll also put into kind of context, that was fiscal year 25, where we landed last year. Talking about fiscal year 26, through October is a pretty similar story. We're about 99 million above benchmark through October, 0.8%, which again, will kind of suggest here that if we kind of stay steady there, we'll probably be right on track. But we're still conceding those cost growth trends to kind of be in the same trajectory that we saw in fiscal year 25. So I think we're really trying to grapple there that, the resources are not going to keep up with kind of what those spending needs are looking like. I think the other thing I would just add here is it's important to understand kind of what the numbers are telling us from a tax, from tax categories, right? I'd say the places where we've actually seen most of our tax revenue growth are more speaking to kind of prior economic activity. So we think about our non-withheld income, which is really things like capital gains, stock market performance. Those are things that are kind of, we actually see translate into tax revenue collections about a year later. And so as we think about kind of strong growth in the economy from a couple of years ago, the categories that are performing well, they're really indicative of that. Our most predictive categories for kind of where we are right now economically and where we might be going are the places that we've been seeing underperformance. So corporate and business, for instance, which is really kind of focused on corporate business profits, through estimated payments, those have been underperforming significantly for the last couple of years. And so that's a place that we have really kind of been seeing some underperformance against our benchmark. Similarly, sales and use. So, what are people kind of, spending it on goods? those have been underperforming or kind of right on benchmark for the last couple of years as well. So we're really, I think the places that we're kind of keeping our eyes on for what we might be seeing in the months and years ahead have not been keeping up with the categories that are kind of more, again, focused on prior year economic activity. So what does this all mean for us? It really means, our resources are likely going to remain limited as they were this past fiscal year. It's going to require quite a bit of management on our end, and it requires to be really thoughtful about how we deploy limited resources in a time where, because of federal change, because of our all shared priorities, we have a lot of spending needs out there that just, again, don't really match up with what we're seeing on the revenue side. So we as an administration, I think with our partners in the legislature, we've been working really collaboratively to try to manage these costs, try to work with agencies, asking them to try to manage down to the appropriations that they have in the GAA, kind of look under the couch cushion there, try to kind of manage figure out what those tools are to kind of manage those numbers. With a real goal of trying to maintain services as best as we can, but also understanding that there's going to be places where we're going to have to take a better look. We're going to have to kind of squeeze down a little bit in an effort to just live within our appropriations and manage the year in balance. Again, Massachusetts has a balanced budget requirement, so we are going to have to make the books work when it's all said and done. And so all the work that we're doing now is really with that goal in mind of trying to get that revenue and spending to align more closely. So I hope that's helpful. That was kind of my pitch here. Happy to answer any questions or turn it back over to the GIC folks.
Yeah. Hey, Eileen, go ahead. You got your question.
Hi, Chris. Nice to see you. So I have a couple of questions. One, you did talk about how we saw a lot of tax revenue growth a couple of years ago. Probably like historic levels of tax increase.
Once in a 30 year.
Yeah. But at the same time, we expanded a lot of programs, right? I can rattle off universal free lunch, free college, C3 grants that other states don't provide. So I guess, do you have the numbers, kind of how much of the cost pressures are eaten up by some of those new program expansions versus, if we had gone off the baseline?
Yeah, well, nice to see you, Eileen. Yeah, it's a great question. I think interestingly, we're definitely looking at that, right? Where can we highlight that kind of cost growth coming up kind of from that period of time where, again, we had more revenue than we probably could have conceivably expected in the out years there. I say once in a 30 year, and that really is true, right? I don't think we've seen anything like that in quite some time, and probably won't for a bit. I think the one thing that kind of translates that a little differently to how we think about the budget right now is you're absolutely right in the programs you named, right? We looked at, universal school meals. We looked at C3 grants, which is for our early education providers. Those were federal pandemic era programs that the feds were subsidizing for us that we then transitioned onto budget. We also had, I think, the fortune here of surtax revenue coming online kind of right after those dollars went away. And so a lot of those programs that we really saw the most substantive growth, actually, we've been able to kind of transfer over onto kind of new surtax revenue that we didn't previously budget for. That's not to say there aren't programs. I think across the whole budget, right? It's not just education, but across the whole budget, we saw growth that likely would not have been able to be sustained with the revenue, that baseline revenue that we should expect in the future. So definitely something we're taking a look at, but there's some caveats there as well, kind of which programs we kind of really saw grow and how we've been able to manage those moving forward.
Madam Chair, could I ask one more question?
Yes, of course.
So the numbers you provided on healthcare are mind-boggling. $2 billion for Mass Health, and the over $200 million for the GIC. I was at an event yesterday with the CEO of a major health insurer, who indicated the trend isn't going away anytime soon. So I guess the question, and in light of, we just had a Health Policy Commission annual cost trend hearing, right? The HPC spends a lot of time and effort putting together reports about what is driving the cost. And I'm just wondering if, given all that we're seeing in this healthcare realm, if the administration is looking at any kind of systemic reforms to healthcare.
Yeah. So again, another great question. And, we're working really collaboratively across all of our agencies here to kind of figure out, where are these cost pressures coming from and what are the tools that we have to manage that. And so, we are really taking a good look and trying to figure out kind of based on where we are right now and what we need, kind of what is not to what's on the table. I think there are going to be some things that are kind of shorter term fixes that we can do a little bit more easily. There's also going to be maybe some longer term things that we have to look at to try to kind of, to your point, kind of look at the system a little bit more holistically and with a long term view. With the goal of sustainability, right? Because I think that's the biggest thing, to have these kind of, ebbs and flows of what we can do based on revenue is going to be challenging. So trying to kind of figure out what is that sustainable trajectory that we can all kind of live by, and what are the changes that we need to make to get there. Definitely all things that we are looking at. Again, we're really lucky. We have a great team at Mass Health. Very lucky to work with Dana Sullivan on the call here, over here at A&F. We have a lot of really strong healthcare policy minds who are, I think, really trying to kind of, put pen to paper on what those tools will look like, and then what are realistic timeframes for actually being able to implement things that have meaningful kind of cost savings. Also, again, with the goal of trying to preserve services as best as we can, right? Because I think, again, we could all collectively agree here, providing access to healthcare is a top priority, definitely a top priority of this administration. So how do we do it in the most thoughtful way possible?
Thanks.
Yeah. Good questions, Eileen. Thank you. I don't see anybody else having questions. Chris?
Madam Chair, can I just add one quick
Yeah.
thing? Chris mentioned our website. I can't use the chat function, but it's mass.gov/fedimpact. That's the website where you can track the OB3 impacts on Massachusetts. So if folks want to check that out, I'm happy to answer any questions as folks explore that webpage.
Okay. Yeah, thanks. And maybe we can make sure we get those in the notes, so that we can see that. That would be great. Hey, Dean, I see you have your hand up for a question. Go ahead and ask.
Yeah, I was thinking about the question that Eileen asked about systemic change, but you addressed that. I wanted to ask about thoughts about what parts of the rainy day fund might be potentially in play, and also a kind of related question that was mentioned earlier, which is, kind of breaking out revenues that are derived from fair share money. I mean, in other words, is there some some potential to cover some of the losses by allocating more money from that sort of pot of money? So that's kind of what I was asking, the rainy day fund, and if we dedicate more money from the fair share funds, how does that calculate?
Yeah, absolutely. Well, let me take your second question first, and then I'll get to the state fund. On the surtax revenue, right? It has been extremely successful as far as kind of what we've been budgeting at the start of the fiscal year versus kind of where we've landed with the first couple of years here that we've had in play for the budget. And so, we are really trying to be thoughtful here now. Again, these are revenues dedicated to education and transportation. And so we're really trying to be thoughtful here about how we can deploy those in a reasonable way that supports kind of existing commitments, ensuring that in a tight budget environment where we're making a lot of cuts, can surtax be a way to avoid those cuts and kind of try to make sure that those core priorities in education and transportation can be supported, and in some ways I think kind of relieve a little bit of pressure off the budget as well. So we're really trying to be thoughtful there, and also kind of again live with the intent of the constitutional amendment there that it goes to education and transportation. So we definitely view it as a tool, and we definitely view it as something that kind of within those bounds we're able to use to kind of help support those core programs and avoid cuts there. On the stabilization fund piece, I would say a couple thoughts. One, we've been doing a lot of work right now. We're actually doing a kind of long-term liability task force that A&F is the Secretary of Work is chairing. And I think one of the things that we're looking at is kind of the solvency of the rainy day fund and kind of how it can stand up to some of the past recession models that we've seen. And I think if you look at those past models, and I know a lot of folks who are on this call probably here for some of those recessions and kind of saw the tools that we had to put in place. When your revenue is falling in one of those recession environments, it falls fast, right? And so I think we have to be really thoughtful here about, we've collectively done a really nice job of building up those reserves so that we can withstand those revenue downturns. We're in a revenue growth environment right now. And so to the extent that we are kind of going into a reserve like that in a time where revenues are growing, it's just going to be kicking the can on making extremely hard decisions when revenues next have that type of downturn. So I think we just want to be really thoughtful there that a revenue growth environment. The challenge right now really for us is on the spending side. Again, you're talking about a one-time resource. Revenue really isn't the problem right now. It's not the focal problem. It's just not really keeping up with what we're seeing on the spending side. And so I think we're just trying to be really, really thoughtful there. And I guess that's the second point, right? Which is, we're talking about this. We're trying to think a lot about kind of sustainable, recurring ways to manage the budget, because once you start dipping into the stabilization fund to support these things, it's really hard to stop. And so I think that we're trying to avoid, kind of going into, we're trying to be really thoughtful here about kind of what the tools that we have are that are sustainable versus one time, and try to manage that way.
Just a quick follow-up.
Yeah,
I'm sorry. So then if you're characterizing it as not a problem currently of revenue, then I'd like you to explain again why we would be presented with a forecast that is essentially calling for almost extensive preemptive budgetary cuts. That's kind of why I was asking about sources of revenue, because I'm thinking that if we need to engage in planning for projected severe cuts, then where can we find revenue in anticipation of that? So I guess I'm wondering about the premises behind the planning that's going on.
Yeah, absolutely. I hear what you're saying, and I think at the end of the day, I think we're really not in the business of taking kind of tools off the table for discussion, right? I think we kind of discuss what all of our options look like. I think the biggest thing that hopefully this presentation kind of shows here is, the fundamental issue here is that spending is outpacing our revenue growth. And it's not to say that revenue isn't growing, it's just growing more moderately than spending. And so at the end of the day, I think you kind of see that there's this fundamental mismatch between spending growth where the budget wants to grow and what our revenue wants to do. And so, keeping that in mind, I think that's where we're kind of looking at, again, we're looking at all levers here, but I think we're certainly looking at kind of from a spending perspective, what are the things that we can do to kind of ensure that from a sustainability perspective, spending remains more in line with what we can expect revenue to do, which again is still growing, but just not by as much as the spending wants to. But great question. I think again, we're like I said, we're reviewing kind of all options here and trying to kind of keep all those ideas on the table just to understand kind of, what the right package of tools looks like.
Yeah. Well, thank you, Chris and Dean. And I think what you said, Chris, if you can remind me, is that revenue is growing at a rate of 2 to 4%. Healthcare is growing at a rate of 12 to 15% or somewhere double digit. So that's not a great recipe. So I'm glad you're preemptively giving us this viewpoint. Jane had her hand up, and then Eileen, you have your hand up. So I'll let both of you ask questions. And Jane, you have the floor.
Thank you, Madam Chair. Chris, I appreciate your use of the word thoughtful, and I guess that's what all of us are doing, trying to struggle to make decisions that are in our members' best interests while recognizing the fiscal challenges that the state is experiencing. And as I understand your presentation, you're saying at least 3 points: that the federal government blew a hole in our budget, that healthcare costs are rising much faster than revenue, and tax revenues are essentially flat, so priorities will collide. And if I'm understanding that, according to the notes I've taken, I find myself thinking that the GIC's job, as you well know, is not to simply absorb when we think about a vendor's promise of savings. So I'm still struggling with the idea of some of our decisions that we've made, because it would strike me that our job is to protect the health and dignity of the members who rely on us. And I've certainly heard from a number of people in the state that feel that we have not been as thoughtful as we need to be, and perhaps should redirect some of our energy away from placing increased burdens on our enrollees, and should tackle the larger issue of just doing all we can to reduce healthcare costs. And so I guess some of the questions I have, and I don't expect you to answer them all here, but I'd be happy to share the ones I have received. I wonder what concrete evidence, numbers really, not assumptions, would show, for example, that the VITA program will reduce GIC healthcare costs. I mean, how does ANF have some confidence that our decisions make sense, that they'll reduce those costs more effectively than supporting members through their own primary care physicians? I wonder, I can't help but worry about the possible significant disruption that this program is going to cost for patients and for PCPs. And I continue to struggle with, why is the burden being placed once again on enrollees rather than negotiating pharmaceutical prices or PBM practices or other true cost drivers? I worry also, which will surprise no one, about issues of equity and access. How will even ANF and GIC ensure that low-income members with limited digital access, or members with significant caregiving responsibilities, are not disproportionately harmed or excluded? So if you could kindly touch on any of those questions and offer your thoughts, it would be much appreciated. Thank you.
Yeah, again, great questions. Definitely appreciate them. I mean, I'll definitely say on the first question on VITA, again, we collaborate really closely with our partners across all state government, and so here we've had a lot of really productive conversations with the GIC team, and trying to kind of understand what those options are. And so I'm definitely not as well equipped to speak to kind of that particular program, and kind of the different options, kind of getting to that point. So I would defer to them on that. But I would say on the kind of equity piece of it all, right? I think that certainly is a top priority of the Haley Driscoll administration. I think we are, in everything we do, we put an equity lens, an access lens on it. And so certainly as we weigh all of these options, as we make all of our decisions, we are absolutely kind of keeping those things in mind. And that's not to say that decisions that are made are all easy decisions. I think the reality, I think we're kind of in the business of making tough decisions here, but I think we're certainly always looking at weighing those factors as we make final decisions. And so I think, again, we're certainly happy to keep close, kind of view this as a dialogue here as we think about the decision-making process and kind of how we're putting that type of lens on the decisions that we're making. I think it's certainly the right conversation to be having, how we're thinking about access, how we're thinking about equity. And I think, again, it's something that we certainly take seriously as we make, again, really hard decisions across the whole budget.
If I just may add, you see, I appreciate that, but I'm looking for the how, because when I even look at our minutes, we're talking about the potential of 30 to 50% people dropping off with the transfer to VITA. When I see that percentage, the first thing I think about is, who are those human beings? Who are they? And what's the demographic? Are they low income? Are they retiree? Who are they? They're people. And so when I ask the question how, it's to give us the transparency as a GIC to really know that the decisions we're making are ones that we can live with. So it's really a question of how. I do hear you when you say that, yes, this is an administration committed to equity and access, but at the end of the day, I like to have a better appreciation of exactly how we can have confidence that as we make these decisions, that people who are perhaps in the direst of need are being protected.
And we all share that concern, Jane. And I think I don't have the notes in front of me from our last meeting, though we did ask the staff um, to really look at the outcomes of Vita Health, not just on savings, but also on, better healthcare outcomes or, better uptick of the lifestyle type initiatives that Vita will put in place. So I know the staff is going to be monitoring that. It was part of implementation. So, I asked the staff to make sure that they're continuing to be committed to showing those outcomes. Eileen, you're up next.
Yeah.
I know we're getting a little bit behind, but this is good, good conversation. Let's be as concise on our questions and answers, though, to be on time. And you always do that, Eileen, so thank you.
Thanks. I guess I want to pick up on the thread that Jane just raised and say, this is a tough situation, I understand, for the Commonwealth, but part of it is because we keep accepting the status quo, right? Like every year we give supplemental payments to providers, but we expect no change or nothing different in return. And I guess I would just say, if we're worried about finding coins under the sofa cushions here, like we need to understand better what's driving the cost. Why is it 3 times what inflation, what consumer price index, what wage increases, what everything else is, and tackle it. So I guess my request is, once again, like these kind of fixes when we're in this dilemma are tough, right? We don't have lots of options. We have to proactively start to manage this. So I guess that's my plea to this administration, to start looking at this systemically.
Chris, if you don't mind, I might take this. Just given that I have been working on healthcare policy across the administration and I working very closely with Chris every day, I think this is on our minds and there's a balancing act we have to perform. And Chris alluded to this earlier, where we need to look at the underlying causes, but those aren't quick fixes. And so what we're facing right now is an immediate budget pressure in FY26 and FY27. So we're going to have to make some hard choices and simultaneously work on bending that trend, because you're right, we're not going to solve it by nickel and diming everyone. We need to think and work together across state government, internal and external stakeholders, really. How do we think about this collectively and bend that healthcare cost trend so that we're not in this position every single year? I don't know if you want to add anything there, Chris.
No, I think that's exactly right.
Yeah. Oh, thank you, Dana. Anna, you're up next.
Hi, everyone. Thank you. Thanks for this opportunity to discuss these issues. And I think I just really wanted to make a comment for our commission, and I know that the administration knows this, but we've been talking, over the last 20 minutes or so, about growth in spending on healthcare, sort of combined Medicaid and commercial, and they're both really growing, but they're very different and the drivers are very different. And so I just wanted to highlight that. And in fact, I think the projections around Medicaid, this is a really, really tough year for the states on Medicaid, but the projections suggest that maybe it'll come down going forward a little bit. It's also driven by, federal policy and enrollment in a way that what we're facing at the GIC with commercial spending isn't. And so I think it's really important for us as commissioners to just remember that. And I think when we think about solutions, it's probably different types of solutions to address price growth or spending growth, really, in healthcare, and that the commercial side is going to be different than the Medicaid side. And so that's my comment.
Thanks, Anna. Bobby, go ahead.
Thank you, Valerie. My concerns are very, very similar to Jane's concerns regarding impact on our membership, right? And that the focus, although I appreciate that the administration is looking at equity and access, it doesn't seem to translate into that. That I'm curious why this burden should be absorbed by our members, right? By state workers, by public sector workers. It's very concerning to me when I'm curious why the governor is not introducing legislation, perhaps to negotiate better prices with the hospitals or with the pharmaceutical companies or with the PBMs, because the costs, right? Our job is to provide health care, right, statutorily for state employees, for public sector workers, and to make certain that they have it where every single year there are more and more costs. And the share, the cost share is greater burden for public sector workers. And I'm very concerned about the impact. I understand very clearly about the federal impact on the budget, but I don't quite understand why the burden will have to be, there's an increased burden on public sector workers. It's very concerning where this trend is going. And I'm curious what is being done to avoid that.
So it's a great point. It's a great question. And I think, let me say first and foremost, I think you've probably heard the governor talk about this all the time, affordability for the Commonwealth, for state employees, for all constituents here is a top priority, right? And just, be rest assured, we are leaving no stone unturned. We are looking across the whole budget. I think GIC is just a piece of the broader discussions that we're having right now across all agencies, across, again, all constituencies here, trying to understand, what those tools look like. As I mentioned before, it's not just GIC, it's not just Mass Health that are driving costs here. It's across the board. And so we are looking across all programs, all 700 plus line items that we put in the budget every year. We are taking a good look at. We are spending the time and trying to understand kind of what that growth looks like, but also kind of what we can do to help manage the cost. So this is not, I'd say by no means is this kind of meant to be, is this being put on the backs of just GIC members. This is going to be a collective effort across all of the budget to manage spending versus resources.
Yeah. Well, thanks. Thanks, Chris. Thanks, Bobby. I just want to say that we all have our views on healthcare and usage outcomes. This is going to be a difficult year coming up. And I like what Eileen said. I mean, I certainly like what all the commissioners have said, and I appreciate all the input. But, the last couple of years, we have held steady to the status quo. And, if we keep with the status quo of, what we've been doing with all the levers that you're going to hear about from Matt, we're going to be in the same situation. And so I think about how much unrest there's been for so many years around the MBTA, our public transportation. And while it's not perfect, there were times when the red line, the orange line were shut down and public outcry was crazy. Everyone was so mad. I don't want to be bused, blah, blah, blah. But now if you ride the T after this public unrest that that department in our state just ignored because it had to be done, the red line, at least when I take it, is lovely. So, none of us like this, But if we keep doing the same thing over and over again, and worrying about all the noise of the unhappiness of it, we're going to find ourselves in a situation again and again. And I know, serving a decade on this commission, I just don't want to see that moving forward. So it doesn't mean everyone has to agree with me, but I just want to put it out there. So we're going to move on. Dean, is your hand still up from your last question, or do you have another question?
Another question, or just
you never took your hand down, so I thought it was an oversight. All
Sorry.
right, you can have the last question here,
Yeah,
and we can move on.
Just again in terms of projections. So there are no quick fixes. These involve insurance premium increases, drug price costs, provider costs. And so those are not quick fixes in terms of systemic changes looking forward. But another potential quick fix is that if revenues are down, if projected tax revenues are not down, they're not increasing as fast as rising costs, is there any thought to additional sources of tax revenue? I mean, in other words, there's no way we could make up that difference, but could we make up some of the difference with some sort of new source of public tax revenue?
Unknown caller.
Yeah.
So again, what I'll say here is I think this is all kind of coming back to the point on affordability, and there's different ways you can shift that affordability as you think about tax revenue versus premiums versus whatever else, So I guess I'll say, no decisions are made on kind of anything at this point. We're really just at the beginning phases of the budget cycle here, right? The budget, the governor's budget will be out in January. We're really kind of at the start here of reviewing options here, and so again, we're looking at everything, but we're certainly no, I guess I don't really have a lot to give you there right now, because I think we're such at an early stage of trying to kind of figure out what the toolkit looks like here, that I would be kind of lying if I told you that we're doing one thing or the other at this stage. But I mean, I think again, like I mentioned before, revenue growth from our expectation is still 2 to 4%, which is pretty normal, which is pretty much kind of what all states would kind of hope for and expect. The problem we're really grappling with right now is that costs are way too high. I mean, there's really no state out there that has a budget that's growing by 10%. And I think from a sustainability perspective, that's just not realistic. So I think we're trying to focus, we're keeping our toolkit, as broad as it can be, but I would say we are, as again, I hope this presentation kind of demonstrated here, we are really trying to kind of grapple with the idea that spending trends are just well above what we should be expecting moving forward.
Yeah. Well, really good discussion. I certainly love when we discuss these things across all the commissioners and staff. We do need to move on. Thank you, Chris, for being with us today. And thank you for the conversation. Matt, I'm going to turn it over to you. We're probably going to go right up to the 10:30 mark today, and we'll continue this into December. And I want everyone to have as much of an open mind on this as possible. So thanks.
Thank you, Madam Chair. Thank you, Chris, for joining us. So with the foundation that Chris laid out for us here, I'd like to turn our attention to how these budget pressures may be impacting the GIC, and how we need to think about these as we prepare for fiscal 27. So go to the next slide. I won't spend a lot of time on this. Sorry, let me make sure. Yeah, so I won't spend a whole lot of time on this. It's more level setting. I will just note that the GIC's budget target has not been set yet at this early stage. But given the deficiency that we already have and some of the pressures that Chris talked through, we expect that our budget allocation will be below what is needed to continue the plans forward without change. So we don't typically start these conversations until January around plan design, but given all of the dynamics at play here, we wanted to get to you early to start this discussion. I just want to note that what we're going to walk through here are the levers that are available to the GIC with our existing statutory authority. And what we've tried to do is to put as much on the table for discussion and consideration as we can. These are not recommendations from the staff, rather this complete list so that we can know the sort of field of play fully of the levers that are available to us. I expect this is going to continue to be a discussion, as the chair noted. We can continue this on into December. At very least, we want to be able to walk through the levers that are available to us. If we can go to the next slide. Again, I don't want to spend a whole lot of time on this slide that is kind of level setting, but we have tools available to us in 4 different buckets, right? We have participation. So who are the GIC members that we have enrolled in coverage? We are planning to do an audit of our dependents on our care. We do a great deal of work at the front end to ensure that when they enroll, they're eligible for coverage. But we do know that member circumstances over time do change, and it's a good practice for us to do our due diligence and make sure that the folks on the plan are eligible for coverage. We also need to comply with our statute. Plan design in the upper right, which we'll be talking about more here, is really about the cost sharing that relates to our members. There are a few steps outside of that we can consider. And then, with population health programs and holding our carriers accountable in ways that we have already talked about with our audit and our performance guarantees. On the next slide. So just just very briefly, just a reminder of our strategic framework. And as we consider changes to plan design, we always want to have this as our touchstone to inform decisions that we make. Affordability, and affordability has 2 components here that are important to note for this discussion. It's affordability to the Commonwealth through the budget. It's affordability for our members through the portion of premium and the copays and deductibles that they pay, expanding access to behavioral health and health equity. And what you'll see as we walk through this discussion and the other levers is that just in times like this, it all involves trade-offs. We can go to the next slide. So bear with me for just a moment. So here we want to walk through a few slides that will lay out all of these options that are available to us. So you'll see on this slide a variety of steps that we can take, increasing urgent care copays from $20 to $30, never a small or insignificant thing as it relates to the member who's experiencing financial difficulties, as many are, but it is the kind of change that would bring us consistent with the marketplace and what other coverage includes for such a copay. Number 2 here, during the COVID pandemic, we instituted a waiver of copays for 3 mental health visits a year via telehealth. We can reinstitute those copays as a measure to reduce our premium and our budget spend. We can increase the ER copay. Again, I'd say it's similar to the urgent care copay, where never a small thing, and we don't want to make any assumptions about how it impacts the member, but it does. Increasing it to $150 would be consistent with what coverage looks like elsewhere in the marketplace. Lastly, on this slide, we took some steps a few years ago to expand coverage for hearing aids beyond what is mandated in state law. So there are 2 ways for folks who are under the age of 21 and 22 or older, where we can roll back some of that coverage. As you'll see on the right side of all of these slides, we're flagging where these budget savings measures impact our other strategic priorities. On member affordability for all of these, there's some misalignment on the member affordability side. On behavioral health, when we institute a copay or reinstitute a copay for those mental health visits, we're taking a step back from the efforts that we've made to improve access to behavioral health. And when we're constraining coverage for hearing aids, we know that those are still needs on the part of our membership. And when they're paying 100% out of pocket in areas where we don't provide coverage, that has a pronounced impact on our lower income and BIPOC community. On the next slide, we walk through some other plan design changes. Many of these, well, the first and the last, again, are steps that we can take that increase member cost sharing, decrease the impact on the state budget. So there are our POS, broad network plans that provide access to out-of-network services are, in some cases, co-insurance applies on top of a deductible and a copay, and we can ratchet up some of those numbers. I think it's a 20% co-insurance for out-of-network services. That is a number that we can increase. And again, further incentives for members to see in-network services. I'll skip to the second one here and come back to one in the middle, because that one takes a little more talking through. We can increase office visit copays, both on the primary care and specialist side, as I've noted on the prior increases in member cost sharing. We have the existing copay tier structure on the left, and we have some potential opportunities to increase those copays on the right, and still remain largely within that type of plan design in the rest of the marketplace. But again, you see where each of these potential changes is aligned, or in some cases not aligned with our other strategic priorities. So the second one here, implementing a uniform methodology for carrier payment to providers for out-of-network services. So today, we have in statute for our Massachusetts residents a prohibition on providers balance billing the members beyond the payment rate from the carrier to the provider. That should give our carriers leverage to decrease what they pay providers for out-of-network services. We have analyzed the degree to which carriers are taking advantage of that leverage, and we have found that there is a significant amount of variability and an opportunity to create greater savings here, and again, create greater incentive for providers to come in network. That you'll see here, signified with the $3 signs, is a fairly significant cost savings measure. We're looking to model that and all the rest of these out to produce, clear and dollar-based savings estimates. But that is one that we could implement that has little or no impact directly on our members and can produce us some savings. There is a related provision that we would recommend pairing with this measure that would make sure that through implementing this, we're able to maintain our members' access to these out-of-network services where necessary. On the next slide, forgive me for talking through these as quickly as I can. So here we have increases in health plan deductibles, particularly for our commercial plans. Medicare plans do not have deductibles today, so we're focused here on commercial plans. Again, we have fairly low deductibles when you compare GIC coverage to the rest of the marketplace. We've done that as a matter of strategy and in the interest of our members, but there are opportunities here to, again, reduce the premium and the budget obligation by increasing the obligation, the cost obligation for our members. But of course, you see through the red dots, that decreases their affordability. And in both cases, so these are options, right? We can't do both of these. It's increasing deductibles by 100 and 200, or it's increasing deductibles by 250 and 500. But when we do that, again, we know that increasing that member cost share has a particularly a higher proportional impact on our members of lower income. Moving on to the next slide. I think this and maybe one more slide and then we'll be done. So there is a program that CVS offers as our PBM called Prudent RX. This is it's going to take me a moment to explain this because it builds on the sort of complexity of what is already a very complex system of financial incentives in prescription drug space. This is a program, and I'll speak about it in a minute, but I just note that it's a program that is implemented by the majority of state employee health plans with which CVS works. And we're trying to get a better sense more broadly how commonly these are implemented. But my sense is that they are quite commonly implemented by state employee health plans. So program works in the following way, just by background. So a health plan struggling with rising prescription drug costs, one of the tools that plans have that the GIC has utilized is tiered copays based on the cost of the drug, and particularly in areas where there are less expensive alternatives for drugs, where the more expensive drugs have a higher cost share. That, if you view that from the perspective of a drug manufacturer, impedes access to their drug. And so what manufacturers have done is to implement financial assistance programs, most commonly through copay coupon programs that enable the manufacturer to essentially pay the member's copay. But that blunts the plan and the PBM's tools to mitigate the cost and manage the utilization, right? So what this program does is a further response from the PBM. When the member arrives at the point of sale to pick up their prescription, they're asked to pay their copay. They present the coupon that they've been provided by the manufacturer. And this program would allow the GIC to essentially obtain all the revenue, all the financial value of that copay coupon and offset our prescription drug spend. It's a complicated program. The reason we have member affordability in red and green is that the program requires a member to enroll in the manufacturer's copay assistance program. If they do that, they have a zero copay for that drug. If they fail to enroll, they may be faced with a bill that is for the entire cost of that drug. So the work of CVS through the Prudent RX program and our communications to our members is really to make sure that members do what they need to do so that they don't face that financial liability. Second here on the list, of course, revisiting the question that we've struggled with over the last several months, which is whether we can afford to maintain coverage for GLP-1s for weight loss. I continue to believe that we should continue to cover those drugs, but there's a reason that they are increasingly eliminated from coverage by health plan sponsors across Massachusetts and the rest of the country. So as you'll see, that has the biggest number of dollar signs next to it, the potentially largest favorable impact on our premium. But you see that red dot on the far right. We know that if we eliminate coverage for these drugs, those who will be able to pay a cash price for these drugs are those with the financial means to do so. and we worry about what that impact will be for communities of color. The last two are premium contribution. Last two on this slide are premium contribution changes that are not set in state statute in the way more broadly that they are. So we do have some discretion as a commission. On the dental coverage, the premium split today is 90% paid on premium and therefore on the budget, and 10% for the member. We could align that premium contribution to what exists for that member's health plan premium split. So if they pay 25% of the premium based on their date of hire, state picks up 75%, we would match that split for our dental plans. Lastly, here we have a similar change for surviving spouses. So these are surviving spouses when the subscriber, the state employee, has passed away. We have a more generous premium contribution split for the surviving spouse than existed for that coverage when the member was still alive. We could again match that to what the deceased member's premium split was. So that's that slide. Do I have one more? I'm trying to, okay. So just discussion questions. We're looking for your feedback. As we go through the next several months, we want to hear from the commission about what information would you like to see from us as we continue this discussion? What principles in your mind are the most important as we prioritize the list on this items, the list of items here? And what strategies do you see that you're aware of that we have not included here that you would like to see us model? And I'll stop talking.
Yeah, thanks, Matt. Eileen and Bobby both have their hand up, at least that I can see. Go ahead, Eileen. And I hope we can go a little bit past 10:30 if folks can hold on. So
I'll be very quick. And at the risk of sounding like a broken record, I would like to see what other states are doing. My understanding is like Maryland, Montana, Oregon, there are several, I think Rhode Island, they've implemented where the reimbursement rate is tied to some proportion of Medicare. I think that's one thing that we could look at. But I would like a better sense of how other states are tackling this, because everyone made the point that all states are facing it. So we'd just like to understand some of maybe the best practices out there.
Yeah.
Eileen,
Really good.
sorry, Eileen, I just want to clarify. Are you talking about the out-of-network benefits being a factor in Medicare?
I'm just talking about more generally, right? Like, can we design plans that that kind of change this cost trend?
Yeah, the Oregon State Employee Health Plan has done this more broadly, Darren, beyond out-of-network to a broader range of in-network services as well. We're happy to dig into that a bit more.
Yeah, and we've had WTW ad nauseum tell us, how we compare to other states, and we're far more generous than many states. So it would be good to have, a dust off of what we've done in the past, and to Eileen's point, level set how we compare in the state of the Commonwealth to other states. So that would be a helpful follow-up when you've got the time to do it. Bobby, go ahead.
Thanks. I hold on a minute. Okay. So I'd like to know I'd like to get some numbers. For instance, what's the utilization of our members for urgent care and for ER? Like, how many of our members, utilize that, go to urgent care? What's the cost of that? And also for emergency room visits. And I'm curious on the Prudence RX, how that would relate to Vita Health when it comes to the GLP-1 ones and what the requirements would be, because they each have certain requirements for the employee to, fulfill. So how would that work in reality, right? The employee must enroll in Vita Health and then also must enroll in Prudent RX or not. And do they overlap?
Yeah,
Very
we
curious
can
how
look
that
into
would
that,
work out.
Bobby. Yeah, we're happy to look into that. What I neglected to mention around Prudent RX is that applies only to the drugs for which there are manufacturer coupons, right? And so the question you're asking is really, are there prescription drug coupons that apply to GLP-1s, and how would that overlap with the other programs? We can take a look
Yes.
at that. Thank you.
Thank you. I appreciate that. And I'm curious also, like, how many surviving spouses are there? And would that also impact other dependent, children of deceased employees?
Yep, good questions, and we'll take those back and bring them back to the commission for our next discussion.
All right, great.
Thank you. Thank you.
Thank you, Bobby. Toby, go ahead, and then Darren.
Okay, I just want to second what Eileen said, whether it's by studying the Maryland program or other information sources, but we've never tackled the provider pricing. We rely upon the plans to go out there and negotiate rates, and then we wonder why prices are going up. I think we've really got to tackle them. I go way back, so I remember fee schedules, I remember rate setting commissions and all that, and it does put a lid on the cost. So I know it's a big thing and there'll be a lot of pushback, but if times are like that, let's go for it, or something like that. Thank you.
Yeah, Toby. And I think that requires legislation. So to the degree, you have this bullet here, Matt and staff, these are strategies that we're asking you to look at. They're longer term, but they have to get started now.
My suspicion is all the ones that have a big impact, unless we just, throw it on the back of members.
Yeah.
It's going to require legislation, but if times are tough, let's go.
Right.
Everybody's got to get in the boat.
Yep.
So thank you.
Yeah, thank you. Go ahead, Darren.
Yeah, I just wanted to comment on the RX programs for the discounts and zeroing out copay programs. We use this quite a bit in private practice outside of, basically with clients all over the country. And these programs really helped employers identify employees who were eligible for these programs and had no idea they were. So not only does it help the employer plan, it is a tremendous help to the member who's able to take a drug that they may be paying a significant copay for and zero that out. And they just have no knowledge of the program that they could already be participating in. So what we found is these programs were really helping people who were significantly disadvantaged economically. So and the member lift is very small. It's a very concierge type program.
I'm on mute. Go ahead. Thank you, Darren. Jane, go ahead. How about we go to Dean and then we'll come back to Jane, and you can take yourself off mute, both of you, in preparation.
All right.
One of you has to go. So Dean or Jane, off of mute and talk.
My cursor wasn't responding. I just want to endorse some things that were said before about comparative exploration of reference-based pricing or all-payer schemes or other kind of things that are happening in Oregon, Maryland, and so forth as a kind of more a way to get at the fundamental drivers of this, where otherwise we're sort of left to make bad choices, and we're concerned about the impact on our members.
Well said. Go ahead, Jane.
And as I listen to Chris, it sounds to me that he's noting that GLP-1s and high cost drugs are driving supplemental funding needs, and that to me reveals that, at least raises questions about what the state is doing to address pricing or purchasing efficiency. And so the question I'd have, if we could actually talk with ANF again, if he's pointing to GLP-1s driving supplemental costs, what work has ANF done to negotiate better pricing across the state, to evaluate pooled purchasing or explore value-based contracts before turning to member-facing restrictions like VITA? The other thing he talked about was emphasizing that mass health is the largest budget pressure, at least that's how I heard it, which to me implies economies of scale, and that cross-agency solutions could possibly help, which raises a question. Since mass health faces similar cost pressures, well, what cross-agency strategies, I'd like to know what they are being currently explored to leverage the state's purchasing power, approaches that could lower costs for both Mass Health and GIC members, again, without adding hoops for enrollees.
Yeah, no, thank you, Jane. That's helpful feedback. Go ahead, Anna.
Thank you. Yeah, just to add to the interest in what other states are doing, I believe Vermont, Washington State, and Indiana have all recently passed legislation trying to address prices through state-based reference pricing. I believe it's tagged to the Medicare prices, and so those could be just to let everyone know, those could be models to look at.
Yeah, that's great. Thank you for that intel. Hey, Tamara, go
Yes.
ahead. Hi.
Yes, I feel that many times when there are some major strategic decisions that have to be made, that we tend to sort of nibble at the edges and trying to put band-aids on things rather than looking at the whole big picture. And I feel that sometimes it is important, once we have the data of understanding what the challenges are, in all respects relating to healthcare or drug pricing, then looking at what the benchmarks are and what other states are doing, is taking a clean sheet of paper and then deciding on, well, if we were to design a program right now that would meet the needs of those individuals within our Commonwealth that are under the GIC plan, and where healthcare costs are going, what is the ideal strategy that we could plan in formulating this design of a health plan that will make sense, and then implement it over several years and keep harmless those individuals that are in the plan now. So in other words, you sort of transition to where healthcare costs are going, rather than just trying to put band-aids on it. It is so important, I think, to look at where we are heading. And healthcare costs are not coming down. Prescription costs are not coming down. There might be in some sectors because of federal legislation, but it's a matter of really thinking about it. And we have in Massachusetts, some of the lowest copays in terms of what the employees are paying in comparison to some of the other states. And I'm not saying that should change. What I'm saying is we need to look at the big picture rather than trying to put a Band-Aid on it. I know there are many, many decisions relating to equity and costs and so on, but I think if we could continue to sort of model a strategy over several years, and at the same time keep harmless those individuals that are in our plan now, so that they don't feel that, you know, they're being attacked in any way. But this is a multi-year effort, and then have legislation to support us. It's so important to think about this in a long-term basis.
Yeah, no, thanks, Tamara. Dana, you might be commenting on some of that long-term focus.
Yeah, I want to take that. I also want to just respond to one of the things that Jane mentioned. I think as Chris mentioned in his presentation earlier, we are looking at everything. I just want to set expectations in terms of our ability to collaborate with Mass Health, particularly around prescription drugs. There are restrictions because they receive different pricing as a result of being a Medicaid agency. There are limitations on what we can actually collaborate with them on. We are continuing to explore options and really trying to make sure that we're making the most of it. But I just wanted to set that expectation.
Yeah.
I'm also happy to ask one of my colleagues to come back or speak on the budget again if folks found that helpful. And also I am available if folks ever have questions for me on the budget. And then on the long-term planning, Tamara, what you just covered, I think is so important here. And Chris talked about this a little bit in his presentation as well. We have an immediate term issue and a long-term issue. And so we really have to think, what is the long-term plan here? And the GIC staff has been really thoughtful in putting together this presentation and the levers available to us in the short term. And I think looking forward to continuing the discussion over the next couple of months to really understand what are those long-term levels and how can we levers and how can we engage moving forward.
No, thank you, Dana. That was very
on
well
the
said.
on the collaboration, on the question about collaboration with other payers like Mass Health, I'd just say two quick things. One is that we are in very regular touch with our colleagues at Mass Health on all the challenges that we share in common. I think prescription drug costs certainly is high on that list, but we are also very different programs, designed very differently. Mass Health constrained by federal and state legislation. But the point you raised, Jane, is a good one. Where are there opportunities, given those complexities, to potentially leverage greater savings by working together jointly? We're always exploring that.
Yeah, well, thank you. And we know that, Matt, that you never stop thinking about that. So thank you. All right, well, I can't think of the last time we were so engaged that we went over by 15 minutes. So let's move to our last agenda item. Motion. Do we have any other business? I'm assuming this was the business of the day.
It is.
It's important and it will continue. So let's be as open-minded as possible, understanding that some of the things that we're looking for, have shades of definition. It's hard if it was easy, everyone would have solved this escalating healthcare cost crisis that we have currently and have had for a while. So thank you. Can I entertain a motion to dismiss, or do we have other business to discuss?
So moved.
Okay, so Eileen,
Second.
She approved. Bobby, second. All in favor?
Aye.
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 Happy Thanksgiving. Grateful for working with so many great people here, and we'll see you in December. Bye, everyone.
Happy
Thank you all.
Thanksgiving.
Thank you.
Bye-bye.
Bye.